Good morning. Hope everybody had a good weekend. I'm going to share the link with Costa and then we will get started. All right. So, let me share my screen. Open up the chat box. All right. Let's get this party started. Good morning, Costa.
Morning, Mickey. How are you?
I'm good. I'm good. Running behind, but just in the whole week already.
Yeah.
Real quick, I want to give an example, an announcement of new indicator that came out, the captain boxes. Now you
Brilliant.
guys should have the ability to, take a higher time frame, like we do with the hourly.
Yeah.
So this is the hourly on the 1 minute. This is a high, low, midpoint of it. You also have the options of putting it on that open and close line, filtering the background.
Yeah.
And then Jerry's going to make it where,
Nice.
if you have the background filtered, it'll turn with the open and close, it'll turn it green or red, whatever, right? And then you have the ability to do the 5-9 box or any time cluster that you want, which I do the 5-9 box. Biggest thing is, continue doing the same thing over and over, whichever time frame you choose.
Absolutely. Yeah.
And then you also have the ability to extend those through time. And I broke it.
You broke it.
Yep. Let's cancel. Slowly walk out of the room. Reload. Reload without saving. Dang it. And I broke it. Damn it. What did I do?
That'd be a timing thing.
Okay, I'm just going to hit back a bunch.
Yeah.
Nope. That's not going to work.
Reload?
Yeah, I'll just reload it.
Yeah.
Well, this is good because now you guys can see how I personally set them up. So they're on. Because I use a darker background, I like for this to pop. That might be a little bit obnoxious. There we go. I don't really care about the open and the close for the hourlies.
That's quite neat, actually, with the dots. The dotted border.
Yeah, I mean, everybody has their
Yeah.
own taste. Yeah.
Yeah.
All right, now let's try this again and see why. So under the time period, you should be able to switch this to 240. There we go. Now it's working. And now it will extend those 5-9 boxes out through time, so you can see if it comes back to a defined support.
Yeah.
Which it looks like it's extending. Yeah, so extended when you do that, it extends the whole hourly box as well. So that's pretty cool. I don't use it that way, but
Yeah. But you can see relationships, right, between some of the structures there. It's quite cool.
All right. So now moving on, let's start our process.
Yeah.
Let me go to my higher time frame chart. All right. So we're really like I said last week when we get the first rejection, right? Then we get the second rejection, third rejection, fourth rejection, fifth rejection at previous month halfback 50% or CE, whichever religion you follow. You call it a different thing. Same thing, the 50% of the previous month range. That was the trigger that we need to, you know, turn all buy programs back on. We'll be paying attention to it again today to to see if we can start a bullish trend. Everything, if you do ICT, this is a breaker right here. If you do indicators, right, and follow the Oliver Kill method, right, you got a successful wedge pop and a crossover, meaning it popped up, moving averages, the shorter term moving averages got back on top, and now, we wedge pop, right, and now this is just a base from a lot of the TA traders saying, like, it wasn't that bad. Whatever the Fed Reserve said at Jackson Hole, the market wasn't that scary because we had an inside day on Friday. If you do DR, which I don't have it up here. Anyway, we're near monthly levels on DR, so everything about this is telling us that it's not the end of the world, but we need to understand that, like, this was the only summer style trading that we saw. Like, I know that desks are fully managed again, and, like that whole theory of, selling may go away, traders are in the Hamptons, right? Well, I know for sure that every single desk is now fully manned this week and vacation is over. So we're going to be paying attention to this previous month 50%, and the moment we close on the daily candle above it, I'll be buying some equity risk and start selling risk premium again, right? Selling put structure in the options world for the low of the day. Right now, because we're below it, and we're above the NFP, we still have, when you're in the middle of these things, you have to look for both highs of the day or lows of the day, right? If we're below this and below the previous month the NFP Friday, we'd be looking for the high of the day between 5 and 11. If we're above both of these, we'd be looking for the low of the day. But because we're right in the middle, that edge isn't there, right? From a statistical standpoint, so we're paying attention very closely to both sides of it.
Yeah.
All right, moving to the weekly, to measure the variance.
Yeah.
We're caught up. We're not even like 1% away.
No.
Like, we're not that far away at all. And so we know that we're looking for the low of the week because we're above it. We're looking for the low of the week between Sunday, Monday, and Tuesday, right? For us to close the week higher. All right. If you look at last week, right, this is the Tuesday range that the DR community uses, and we talked a little bit about last week that allowing us to have a good point to, find the low of the week versus the high of the week. The moment we cross back over that Thursday by 11:20, that should have given you somewhat of an edge because it wasn't as clear as the other ones. I need to get something coded up for this, like, right? So this is Tuesday, right? And ICT community uses Sundays, which is right here. This is how it typically looks. Sometimes, most of the time, Tuesday will be lower. Remind me to code something up to put a Sunday and a Tuesday. So when I'm talking to the community, like, I can use the ICT Sunday price to identify the low of the week or the high of the week, and the DR community's ability to see the low of the week. But most of the weeks, you know, like you can see the structure form around these Tuesdays and Sundays opening prices, so you have a good confidence that the low of the week is in. Last week that didn't happen. As a matter of fact, we are stuck right in the middle of it all
Yeah.
right
Yeah.
now. So it's very important for us to take that previous month 50%, and like once we close above that, then start tying these things, because we can sit here and base and build value area. If you're an auction theory trader, you can sit there and understand that we are in a balance area right now.
Yeah.
And until we leave that balance area, which all a balance area is a liquid market, not illiquid, but a liquid market or high resistance liquidity run for the ICT traders, where buyers and sellers, a market is being made in a balanced area. So there's not an imbalance of any side, right? When we move
Right.
out of this balance area for auction theory traders, right, we want to look for other balance areas for us to get to, right? And that was just off the cuff, right? We're stuck in this balance area right here and forming our own balance area. And so if this is the balance area that we're stuck in, we're waiting. This move to this balance area will be an illiquid market, meaning the buyers are in control, or here's a balance area right here, right? If we move down, we're expecting price to get some resistance in this balance area for the auction theory traders, right? So right now we have to just sit on our hands and just wait and take very, very mechanical trades,
Yeah.
et cetera, right?
Yeah.
So let me put the chat on. Hey Matt, good morning. Good morning. Good morning. All right, so now we're going to go into a more zoomed out version of our daily statistics, and I'm going to have to redo it because I deleted it. I guess I did not. All right, taking the high of the week and the low of the week, right? Let's start like this, right? Looking at, oh, he's got a new update. Update to the latest version.
Nice.
I don't like the latest version. Latest version is full of shit because it doesn't line up with my structure. Oh, that's why. So we're gonna take the last quarter of data. So what is that? How many weeks would that be?
Quarter is 15, 16 weeks. Well, it's
Yeah,
13, isn't it? But
yeah. We'll do 16. I always
yeah.
do 16 for everything. So we'll do the last 16 weeks, right? And so we know that so this is Josh Hughes' open, high, low, close stat map, which does a statistical look back, right? We can see that this is the average realm that we can play within the weekly profile, right? And so within this realm, as the week goes on and we can identify signatures,
Yeah.
right, that are obvious, right? Lows a day, highs a day, specifically is what I use, right? We'll be able to line it up. But since it's the beginning of the week, we have to rely on this. So relying on that, and then I usually use these pivot levels by the vet. Um, he's an institutional guy that I respect. He's a veteran. I've seen his license, seen what companies he's traded for before, and know his track record, and I trust him. So
Yeah.
I use his weekly levels um, to kind of build confidence off of, right? And he's released
Yeah.
all this publicly, so I'm allowed to release it publicly. Let me see if I can. Do I not have it open? Let me see if I have it open. I do. Cool. So if you look at these different pivot levels, R1, buy target 1, R2, buy target 2, R3, buy target 3. Since 1999 to 2023, I gotta get my Restreamio back up. All right, there we go. All right, this tells us, which is anchored off of Sunday, right? The anchor point is proprietary to him, so I'm not going to release it.
Yeah.
Right. But we can see that throughout the week, buy trigger 1 and sell trigger, right? Since 1999, they both have a 90% probability of being hit. Both will have an 85% of being touched.
Yeah.
Like now, if we go up to supply, R1, that has an 84% probability of being touched, and S1 has an 80%, 64% probability that both of these sides get touched. All right, sell target 1, buy target 1, both have around a mid 60 probability, 35% of both being touched. R2, sell 2, right up here and right up here. They both have around a 50% probability of being touched, but they, in order for them both to be touched, they have a 15%, meaning that either this is going to be the low of the week or this is going to be the high of the week,
Oh
right?
wow. Okay.
Around this area, right? And then the other side of the week will, whichever side establishes the low of the week or the high of the week, the other side can continue
Yeah.
to go, right? And then we can use, so for example, right, if we come down and we touch this weekly S2, we can do two things from here. We can bounce and cross back over, and then we can go all the way up to, like, let's say the R4, even though it has a 10% probability since 1999 to 2023 of being hit, right? This gives us that realistic expectation of our ranges, right? Or what it can do, right? It can just continue to sell off, and as we start hitting these lower targets, our mindsets shift into this was the high of the week. Why? Because buy target got hit, sell target got hit, and we're hitting the extreme levels, right? So that's a way. That's how I typically use statistics to kind of anchor my weekly profile, right? And so between Josh Hughes' open, high, low, close stat map and this buy pivot, which is anchored off this Sunday, right? We have more than enough on Sunday to put realistic expectations on the chart, right? And so now we can do the vet, right, which is anchored on Sunday.
Yeah.
First 30 minutes, right? Why? There's nothing special about it. It's a new week opening gap for you ICT traders. For everybody else, it's just the opening range for the week, right? But we can see that over the last 187 weeks, right, that +8 has a 33% probability of getting touched. The -8 has a 33% probability of being touched. However, if I put my average weekly ranges on, we can see over the last 8 weeks, the average weekly range was 1,018. We're currently at 12% of that. So we can see that the 2.5 has the negative 2.5 has a 70% probability over the last 187 weeks of getting touched. We can see that the -8 has a 33, right?
Yeah.
So when anchoring this, right, with this system, right, we're kind of stacking probabilities. We see that, right, around the -2.5 is sell target 1. And since 1999, sell target 1 has a 68% probability of being touched. We can see that weekly 2 has a 52% probability of being touched. So that would be a good area to start looking for that low of the week. And then we see that buy target 1 has a 15, buy target 3, no, buy target 3 right here, and weekly 3. So weekly 3 has a 31% probability of being touched, and buy target 3 has a 15% probability of being touched, right? Because we have NVIDIA and then a long rotation and a short rotation size, meaning the swing points, the average swing points are around 100 handles, meaning, you know, the institutional swing points for the ICD traders, the three bar reversals for normal traders, the max extension versus the retracement for DR traders, auction theory people call it, the average auction size, right? That is around 97 to 103, and that's based off of last week's swing points.
Okay.
All right. So now we have a pretty good indication of where the low of the week and the high of the week are, right? So that's what we got. And right off the gate, one thing that pops out at me right now is that midnight is unmitigated, right? Which, if you know the statistics behind that unmitigated through midnight to 1600 has an 89% probability of being hit. Austin Clark does it from 8 to 12 and it has a 70% probability of being hit because that 70% is tailored towards his trading style and when he wants to trade in the morning. However, over all of the day, it has an 89% probability of being hit. All right, so now let's start our statistics for the day. And if I'm losing you, right, in the audience, because I don't only get to see what you are typing in the chat, please let me know.
I'm keeping an eye on that, Mickey.
Okay, cool. All right, so now we look, first thing I look at, generated market clues, right? Where's momentum shifting, right? Did we take out previous day's highs or lows? We have done neither.
No.
We've taken out neither the highs or the lows, right? But we have seen 2 rejections off a previous day's midpoint. One right here. We did a look below and fell for auction theory people, right? And then we did resistance turned into support off of it for the support and resistance kind of style people. So we are seeing rejection off of this. However, we start going into our time-based probabilities. Right, we can see that.
Quite nice, yeah.
Where's midnight? We can see that midnight. Let me check one thing. Let me go to the 5-minute. Okay, midnight has been mitigated. All right, so if you draw out that 5-minute candle across midnight, the midnight 5-minute.
Yeah, I got it.
Come below, and then we came above, and then on a smaller term fractal, we retested it to the tick, right? So it has been mitigated, but it still has probabilities of being returned to, right? So going back to the 15-minute chart, right? So we know our first time-based probability is at 19,763, 70% from 8 to 12, right? Still has a 70% chance. Now we're going to do settlement.
1 second. Sorry if I may.
Mm-hmm.
What was the percentage that you had? I got 76. I'm wondering why mine is different.
I'm on a 15-minute.
Ah, yeah, you did say. Yeah, fair enough.
All right. Let's see, 16, 15. And then when we change to this, we have to actually go to that time frame, which I'm on the 15 minutes, and this is a 15-minute minute. So it will work either way. But we can see settlement price at 17,781 is a 57%. All right. And then we're going to do 1,800. Which has a 64%.
Yeah. Oh.
All right.
Live.
So now before we move on to structure-based and time-based, right? One strategy that we gave the community is the Asia. Okay, so from 1930 to 2030.
I can fill you in on them levels if you want them.
Yeah. So we can see that Asia, we won't get into that yet. Let's just continue on.
Okay.
When you live in a house full of girls, you get hair in your man beard. Super annoying. All right.
Three daughters, mate. I get it.
Yeah. So we did our time based. Now we're going to do our structure based, right? We can see structure here at the 1930. Let me pull up one sheet real quick.
I got a question for you about that when you're ready.
All right.
Yeah, so on the structure side of things, obviously you're going to talk about that in a minute. I picked some levels based upon previous box. But one thing I wanted to ask was I was trying to look at those lower areas, and I'm sure you're going to cover this in a second. And if we look at New York Friday and around what those lows are, is it okay to pick an open? Because I was trying to get the low, right? The low of the box, but the wicks were, I wouldn't say substantial, but far enough away that I couldn't pull that stat. So I picked the open of the 1245 as something to work with on the 5. Would that be reasonable?
So you're going back into, so if you use, so you're saying how many times, think about what you're doing. You're saying how many times did today reach out to previous day and get the probabilities for it, right? So I would say if you're going to do it like that, you need to compare it with some kind of projection-based probability. So the difference between yesterday's probabilities on the midnight snap versus yesterday's probabilities from a projection-based style probability, the projection-based will probably give you more accurate numbers. Because it's looking weeks back, where, let's see, I guess this is looking weeks back too. Let's try it real quick. All right, so midnight snap. What time was it that you looked at?
12:45.
12:45. and then the session would have to end at 12:44. That's what it is, because if we put it into 12:45, it's gonna we'll do 1800 to 12:44, because if we go
Yeah,
into 12:45, it's calculating it as picking up as the days, right? And that gives us
yeah.
a 64% probability. And then if we go to the vet, let me find it. Let's turn off all of this for now. And let's say, okay, so look, we already got it built up 12:45 right there. That syncs is like 93 to 82, so it's like 10 handles away, right?
Mm.
So this is the -2 from a projection base that's got an 82% probability over the last 46 weeks of getting hit. Does that make sense?
It does.
Versus the 64%. So there's more
Yeah.
of a probability of that getting hit than, just doing a 1-day look back, which is not doing a 1-day look back. It's I don't know why it's not showing the samples. Oh, this is looking back 233 sessions days, and this is looking back 46 weeks. So it's about the same average point.
Same. Yeah.
Yeah. All
So
right. That's
yeah, actually that's really good because I didn't. It's tying the structural with the projection as well there, right? And we can see like I guess a disparity between the two. So you would obviously have a decision to make there, and given the way we were speaking about it just now, that seems to me would fall onto the side of what our projection ones are.
mm-hmm.
Is that fair?
Yeah. Yeah. Okay, real quick, I'm going to inject a new step that I'm testing, and I don't know if there's any relevancy behind this yet, but it's something that I'm currently testing. So using the opening range, or ICT calls it the new dog, new day opening gap. I'm personally using 1800 to 1830 to build my projection base, or
Okay.
actually, I'm going to use the flout. So let's see, 1545 to 1645, say 1 hour period. And I broke it. Oh, because it has to be a 15-minute. So let's put this on the hour. And this indicator should be getting released this week to the annual and founding members of the Captain's Times. All right, let's just do 1545 to 1615. My indicators know it's a Monday because they're not working. Go to the hourly chart. Still not working. Wait, this should be on chart. Duh. Go to 5-minute chart. It's telling me it doesn't want to do this today.
It's
All
bank
right.
holiday.
Yeah. Isn't it 1800? I think it is actually a bank holiday.
In the UK. I'm not sure about
Yeah.
over where you.
Well, no, I mean it's not a bank holiday for us, but there's a lot less activity for my actual job now. Okay,
Ah,
so we look at this, right? I just did 1800 to 1830, right? And we'll feed in the projections off of this fixed range right here, right? And what has price done is come down and touch the -2, right? And then now I've got this daily profile up by TFO, who's a good friend of mine, and we don't need to see the weekly profiles. We're going to look at the daily profiles and say that the low of the day, right, hit at 1855, right?
1855.
The 1900, because that's what live prices told us already, and we
Yeah,
can
yeah,
see
yeah.
that there's no. So the likelihood of this being the low of the day is unlikely because let's see, looking back, let's show 100 closest profiles. There's absolutely no scenarios over the look back of that happening.
Wow.
All right, so let's go to a higher time frame so I can do a deeper look back. All right. So y'all want to hear a funny story about that alarm that goes off at 6:10 every day before we move
Yeah.
on? So in the army and in war, the probabilities of you getting attacked is higher during dusk. And why is that? Because that's when you and your soldiers are the most vulnerable, right? Because everybody's coming off of grog, sleep,
Yeah.
they're trying to orientate for the day. So if the enemy spotted your location, right, like they're more likely to have some kind of vision because the sun's coming up and to catch the soldiers at the most disoriented time of the day when they're kind of trying to shave, eat breakfast, wake each other up, blah blah blah. And so like when I retired from the army, I said I would set a reminder of the average dust time for the years, and that's just a quick reminder that you've
Oh wow.
survived the hardest part of your life, and that your job is to be appreciative every single day that you're not being attacked with bullshit. Yeah, so I
Nice
do it every
story.
single time. All right, so moving back to this. All right, so this is supposed to be showing us. There's so many stuff. All right, that's 100. And so now, let's say that let's say, see what the high of the day. Let's say that the high of the day is at 5:30, because that's what the high is currently, and see
Yeah.
if there's any profiles that represent that. And there are. And so now, which profile synchronizes with the standard deviation closest to this, right? Which is the standard deviation? Let's put another standard deviation on it. Let's put a 1 away
Which
from the
one?
anchored time. And we can see that these profiles would have hit the 1, right? So that's a version of what I'm going to be working on in the future. I totally got distracted. Let's go back to this. So we got our structure base. And so you did a structure-based one at the 12:45 right here, and we saw that it had, from a time-based standpoint, it had a 64% probability. From a
Yeah.
projection base, it had like an 82 or something
Yeah.
like that.
Yeah. Yeah.
593, whichever way you decide to do it. And was that an all-day statistic or from 8 to 12?
Well, it was 8 to 12 with me because that was the way I set it up in the indicator. That's obviously for the structural. The projection is all day.
Got it. All right, let's put a standard deviation right at that point. So that's probably going to be the 3.
Yeah.
All right, so we need to change that to 3.2 so we can get that low exactly. Let's go 3.4. Let's go 3.5.
That is
Go
brilliant.
3.6. Right? And
Oh
we're
my
on it.
God.
So
We are.
the true probability over the last 46 weeks is 56.5. Of that swing point. And
Kind
that
of
will be up.
ballpark.
Huh?
That's kind of ballpark, right? With what we already had.
Yeah, it's 12% off, but all right, now let's do this swing point right here. 1.5. Which is right on. We can see that there's a 95% probability of that being hit. So when looking at our structural points, which happen to be the low and the high of the day for Friday, over the last 46 weeks, right, we're more likely to hit Friday's high of the day than low of the day.
Mm-hmm.
So that's a 95.7, which is way bigger than 56, just saying.
I wonder. So the price level we have for that is 903 approximately, right? Or you got 901.
Yeah.
Hmm.
All
That
right.
two. Yeah. Sorry.
No, go for it, dude.
No, I was just going to say that's approximately the area of the Tuesday range, right?
Let me check. Let me
The
get
high.
these extended out. Thought I heard a cop just now. I gotta go. I'm just kidding.
Mickey.
I gotta roll, guys. I gotta get my guns ready. All right, so approximately Tuesday's range. So this is Tuesday. Yeah, right there. So this is
Yeah.
the weekly profile. So the 1930 to 2030, or the 930 to 1030 that DR uses. Yes. All right, so now that we've done the time-based and we've done structural base, right? Now we're going to do projection base. And so now if we know, using Josh Hughes open close stat map, we know that this has around a 56% probability of being touched. We know that this has a 97% probability of this being touched, and that we know that the low of the day on average over the last 10 days, let's do 10 days, has been around 7:15 in the morning, right?
Yeah.
Before we made our reversal high of the day, low of the day, right? So the last 10 days, we did the high of the day or low of the day around the 7:15 candle, right? So with that being said, we need to I'm trying to use my brain right now. I'm having a brain fart right now. Good grief. All right, so now we line this up with our projection base, right? So this 3.6 or this 3.6 right here is
Yep.
a 73% probability of getting hit.
Yeah.
Which is at 20,006. And this is an all day. All right. We know that the average daily range is 330. We've already looked at the probability of this being the low of the day is very slim to none. We know that 330 is the average 10-day range. So if we put our average projection at 330, we know that this has a 70% probability of coming back to getting hit, right?
Yeah.
So this is kind of like painting the picture of what today is going to look like.
Yeah.
Right. So taking all this off. Right. This is the average daily, average 10-day range 330. Just like that. Now we can start figuring out what our projections are, right? Projected, not projections, or distributions. All right. So we can see that on a Monday, the last 46 Mondays, the average distribution was 46 or 4. Right? We can see that from 8 to 12 over the last 45, it was 0.9%. And we can see from 12 to 1600, it was 73. So now we're going to turn everything off.
Mickey, sorry, can I ask a quick question? That was 46-day range there on those distributions. Last week we were looking at 80 days. Is it a reason for the difference?
Now I usually do it on a 15-minute time frame, so whatever it's showing me.
Okay.
Because we were doing the lower time frame was the account for the August 5th week where we had that 1,000-point drop on the Monday. We're trying to take that out of the equation because I was skewing the data.
Fine. Okay. Here we are. That's why my numbers are off.
Okay, so factoring in 4 to 8, right? This would be the average. We still have not moved all that much during London. All right, now we're going to either use, if you're a DR trader, this is where you put your ADR, your ODR, because what we're trying to do is we're trying to align based off of what Asia has done, what London has done. We're trying to figure out what the highest probable outcome for these two distributions are going to be, right? If you're an ICT-based trader, you can use this setup, one setup for life. I think I deleted off my chart. There we go. Right, and you can factor what your kill zones did, right? Those variables that the kill zones did, like we responded off the midpoint of the Asia kill zone were above the London. Because DR is such a great organization when it comes to collecting statistics, I will be using DRs to identify, you know, the highest probable outcome of these two distributions. Right?
Yeah, makes
so
sense.
Going to my
Yeah.
database, clearing everything out because I want to start my checkbook with 4,200 days. So now my checkbook has the last 4,230 days, right?
Yeah.
We can see that Asia went long and held true.
Yeah.
We can see that London has went long and held true so far, but because it's so close that London DR, like I'm not going to put true in, I'm just going to say it went long. Because
Yeah.
now I have to do simulation variables, right? So out of the 4,230 days, we have 806 days left. And out of those 806 days, we have 275, 34% of them were above the London. So we take 930 and 1030, draw a box, put on an opening range, 146.
Run my code.
So we know that 34% or 275 of that 806 left did this signature. We can see that 216 or 27% did this signature, where it engulfed London high and low DR range, right? Since we have a probability right here of 70% between 8 and 12, this is more likely, and this probability is an all-day probability, there's a high likelihood of 9:30 to 10:30 doing this scenario right here, right? And then that would be it capturing that low of the day for us to head higher towards the higher probabilities. Meaning the midnight retracement, right? The Asia lows getting wiped out for the ICT traders, et cetera, right? So if that's going to be the case, then we're going to have to filter that the ADR was broken during 3 a.m. to 9 a.m. That would be true. And then what happened after that? After the 10:30 was a long confirmation.
Yeah.
Just like that. So this right here is our highest probable trade of the day, right? So now the only thing we have left to do is pair it up with the average, pair our low and the high of the day with the average swing, right? Remember we talked about the rotational size being around 100, right? So if we know that this is a high probable area to establish the low of the day, right? And that's a swing in between these lines right here is this average swing, right? 100 handles. So we can say that this is a good area to start a zone for us to look for the low of the day. And that's lined up with the average daily range and all the projections, low of the day zone. Let's make it white and big.
Yeah.
Right.
Roughly
And
right on.
now same with this right here. Let's make the high of the day zone.
Yeah.
All right. And then that is what our average daily, our highest probable trade looks like. Make sense?
Yeah.
Any questions?
Nothing coming out of the chat yet. And it does make sense. I'm actually really happy that some of those levels I obviously had prepared my work before coming on the live here, or for the most part, I haven't finished yet, but some of those levels are lining up and some of those numbers are the same. And obviously in terms of the way I extract some of the daily ranges and 4 hourly ranges is a little bit different. I'm running that through a Python script, but again, I'm really happy that they're ballpark and in my chart they're lining up with what you've got there. So that tells me.
So the biggest thing is like as you do Python scripts for everything, right? That's going to be an edge for me, right? Because I usually have to manually backtest 500 reps of anything that I change to this process, and it takes god awful forever. And so it's good for me that you're doing that because it's going to make this system a hell of a lot more efficient. And 1 second, I need to jump over here. Let me jump over to the live price because I actually have a high probability trade right now. Damn it. Just fucking missed it. It's a 97% win rate too. Right there. Dick. Remind me at 6:30 every single day to jump over to the live chart. I just missed this whole move, and this has a heck of a high probability. All right. So moving on, like back to what we were saying is fuck me. Remind me to. No. What I was saying is like you having the ability to do faster, higher time frames. Dude, we just missed. We just missed the 6:30, bro.
I'm actually in it, but I was in it a little bit before. Sorry.
Oh man. I just happened to
I
look
feel
at this
bad now.
time, and it was like 6:30. I was like, damn it. Oh well.
I feel bad.
So yeah, like all the systems that you can code up revolve in this or any that will make this better is like I'm all on board for it because it saves me the like I know the system very well.
Yeah.
But like anything I change I have to backtest 500 times and that gets very like I'm backtesting at 4 o'clock in the morning. Like when you DM'd me at 2 o'clock in the morning, I was backtesting, and I'm backtesting after work at, like 8 o'clock at night to 10 o'clock at night. I'm backtesting stuff, but it takes forever to get anything new in this system because I have a business plan, right? And my business plan tells me you can't change anything until you have at least 500 reps showing you the edge, right? But other than that, we're gonna call it for the day. And dude, thanks for jumping on.
Absolutely, pleasure.
All right, I gotta write up the newsletter and unfuck my mind from missing that trade.
Cheers,
I try to get off
fellas.
these by 6:30 so I can engage in that trade, but that's all that it was. Went late.
That's that. Mickey 6:30. I've just stuck it on my amplifier. I'll tell you from now on. All right.